All right. Everything looking good. Should be live any moment. There we go. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. Wednesday, Eastern Standard Time on 5/25/2022. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. What's going on, Angel? If you don't mind, somebody just let me know we're coming through loud and clear. He says, hello, everyone. Hello to you, my friend. Bitcoin, if Elliott Wave 1, 2, 3, 4, 5 is playing, what are your thoughts on the correction? Elliott Wave ABC. I've done like a pretty deep dive on that multiple times, but we should essentially be starting the wave, well, it would be the ABC portion of the correction, and we would be essentially in the 2 has basically just finished, and we're in the beginning of the 3 of the 5 waves of the C, of the expanded flat. What's up, Honkiness? Good to see you. Appreciate that. And if you haven't watched that video, you can go back and check that one out. It basically talks about exactly where I think we're at and everything. And then I've retouched on it a couple times. I did one not too long ago, also, like a little refresh in one of the streams. But yeah, it would be the beginning of the 3 in the C of the 5 waves down. So TNX, let's take a look at the markets here. I guess we could talk about Powell first and the FOMC minutes. They basically just said, you know, for the next few meetings, 50 basis points. That's basically what it came down to. So probably the next 3, we get a 50 basis point hike. We've already had, you know, we're basically at 75 now. So I would put it at about 2.25 Fed funds rate. So it doesn't seem that unrealistic. And then we'll have to see, obviously, from there, as we still have quite a few meetings left in this year. And it doesn't mean they're just going to stop altogether. Maybe they'll go to 25. So, you know, the rate of the tightening or the rate of the increases will slow, but will still be increasing the Fed funds rate. All right, so taking a look at TNX. So we're basically seeing TNX and DXY show that weakness we've been discussing playing out over some bearish divergence on our daily time frames. Both of those charts still look extremely bullish on longer time frames, but as far as short time frames, it looks like we're starting, or we have started already, that consolidation or pullback that we've been expecting. Now we do have the daily 821 crossing down on TNX. We are inside of the bearish control zone. We did just get the flip of the slope line on the TJD TDMACD. So all bearish things still very much on top of the 200 exponential and simple. So the trend is still bullish on the daily, but the shorter term swing is probably, you know, is playing out as of, well, right now. As we see, we had the peak right here and a higher peak right here, and we saw a peak right here and a lower peak right here. The beginning of that first drive of bearish divergence, got the hard sell, and now we have the cross right here. So the real question is not how long is this going to last, but how deep is it going to go? So we're looking at like key levels on the way down. So 2.5 is a key level. And then obviously it's possible we get down as low as that 2.0 level. We've discussed on different time frames why those different levels are so important. You know, obviously we have key fib levels at various areas and then moving averages as well. So we really just have to see, you know, there's always a possibility we have the deep retrace back to 2.0 level and catch support and then we continue to the upside. There's also just as much a possibility that we just kind of go sideways and consolidate around this fib level, and then we go higher from there. And then, of course, you know, the whole trend could fail and we could break down. Anything is possible, but, you know, third situation seems much less likely. So TLT, again, staying above those key levels, staying above the 8 and 21. Again, we are demonstrating some bullish divergence in this case from these 2 points. We have a lower low on price action. We have a higher low on our indicator oscillators. We flipped the slope line blue right here, saying that we're starting the beginning of a trend. We've had a couple fake outs or failed, you know, trend breakouts like this. But the key determining factor is if the 821 crosses back to the upside. And we also reclaim the bottom channel, the ascending long-term channel, and we're close to reclaiming the descending channel as well. If we get back above that 120 level, consolidate there, I really do think the target is still that 131 level. So seems more and more likely the longer we spend sort of just creeping up. So U.S. oil, WTI crude, nothing really changing here. We are essentially still just operating inside this channel. We've discussed this channel. I've shown it off many times. And then we have this key fib level as well. We're now just oscillating between the key fib level and the channel. Looks okay to me. As long as we're just kind of going sideways like this inside the range, I don't think anything changes. The real question is going to be, is this redistribution? Is this distribution or reaccumulation? I suspect it's distribution, but we'll see in time. Typically for reaccumulation, you'll see like a down leg followed by, a consolidation and then another down leg, or same thing, an up leg and then consolidation and then another up leg. But usually you'll see a move in the opposite direction of the overall trend before the reaccumulation or redistribution. With this, we basically have just come up to a new cycle high, and then we're just trending sideways. And typically this will end in distribution and a breakdown. It doesn't have to though. So, we don't want to get too cocky one way or the other and make up our mind, decide what the market's going to do. We'll obviously let the market tell us, but we have the key levels mapped out already. So Dow Jones is next. So we discussed basically, to sum it up, how we were hitting key levels on the major indexes and how we expected a potential like short-term trend reversal or bounce from this level as we're hitting a bunch of confluence support levels. That was at the 236 on the Dow. We also talked about the rejection of lower prices, the decent sized wick that we got right here, hard buy signal, and the building of momentum now. So now we're retesting key levels on the breakdown. We're trying to break back above the 821, but it does look like the indexes want to try to trend back to the upside. Now, obviously, it's still a little early to tell, but we're starting to see some of that strength we had discussed. Again, still in a bear trend, very much so, and don't expect that to change. But we are seeing some of that, what looks like rejection of lower prices and potential to move back to the upside for some kind of scalps at least. So SPY again came down to the 236, consolidating, retesting that level now. Still a little below the heart line. We did see some bullish divergence once again. Hard buy signal coming out of the bearish control zone. So again, we're looking at that potential for a retest up to like maybe that 428 level. That key breakdown support, retested as resistance, maybe bump the 200 exponential and simple again. Depends though. If buyers don't come in here and this just starts to roll back over, we don't need to come back up here and retest. We technically already retested once, but it is common that after a pretty clear breakdown like this, we'll get a retest and won't be able to get back on top of the moving averages. And that will signal, like the final weakness, similar to what we saw already in the NASDAQ. And we can see the difference. Here we had a weak retest and then finally almost got the full retest and then had a harsh breakdown. Here with like SPY, we broke down and barely broke down below it. We were able to reclaim those levels but couldn't hold them, and then we had a stiff breakdown. So we can kind of see the difference in the posturing of the chart. And again, we did talk about the divergence signal, the buy, sell, buy, fairly tight placement on the chart. And then we're starting to build a little bit of momentum. Still looks very weak, obviously, and we could easily just fall out of bed right here. Definitely not getting bullish by any means, but we do have to acknowledge that we hit some key levels, and it's likely the market gets at least a reaction from there. From that reaction, though, we need to gauge the market strength or overall sentiment. So here on the Russell, we see we hit the 382 perfectly, as where the other indexes came down, only to the 236. So here the Russell on that initial breakdown already did what all the rest of the indexes have yet to do. And then it broke down again to the 382. So definitely, obviously, much weaker, but we did hit some key levels as well, as that was our high from 2020, pre-pandemic breakdown. So again, very, very important level. We discussed this last stream and I mentioned it a couple times, but every chart we're looking at should have a Fibonacci from the bottom of the pandemic lows to the most recent highs. And then also should have a, daily, weekly, or monthly resistance / support line at the peak from pre-pandemic dump. So that being said, we can see how those levels are interacting and how they're important, and then we can look for confluence for signals. So XLE breaking out to a new all-time high, definitely starting to invalidate our divergence right here, or we have invalidated it at that point in time as we took out this high right here. So still looking very strong, coming back up even higher than the 2.618, and now officially tagging the 886 on the macro. So at this point in time, I mean, we've talked about this a couple times before. The likelihood of a reversal taking place off the 886 is extremely low. Typically, once we hit the 886, we might see a little stumble, but we do expect continuation. So at this point in time, we have to raise the target, the bullish target on XLE to a retest of the previous all-time high, which is essentially at 100. And then also our 3.618, which is, all but our final macro target to the upside, before we would expect a pullback and some other form of like fib to be relevant. So, 100 basically looks like the next target to the upside, and that's still, almost 20% from where we're at now. So energy looking very strong, invalidating bearish divergence, continuing to just see, strength to the upside on what we suspect is this 5. So, once this does top out, we'll have to see what happens. But at this point in time, we have a pretty clear 1, 2, 3, 4, and then, potentially 5th wave back to the upside, following all fib rules and showing that we've essentially shifted from, the daily bear market as of December 2020 into a daily bull market. And then from here, we're continuing to see strength, and longer time frames, are starting to look very, very appealing for long-term trends as well. As we see here, we have the 200 exponential above the 200 simple and very clearly trending to the upside now. So very strong, getting ready to potentially retest these previous all-time highs. And at that point in time, off to the races, blue sky breakout. Now the area we're at right now, though, up to 90 was a previous peak right here from 2008. And then this was our 2014 peak right here. So we do have some serious resistance that stopped us once before around this level. So there is always the possibility that this does in fact top out. And the previous time we came down pretty aggressively, I would suspect if we had a similar type move and we came down aggressively, that it would hold at the 200 exponential and simple. And then that would lead to the continuation, and a strong trend that could last, obviously like months or years into the future. And then just while we're looking at it, again, if we look at the monthly here, very strong, back on top of the 200 exponential and simple. We don't quite have the bullish posture yet. 200 exponential is still below the 200 simple. But this is what, essentially the beginning of a monthly trend would look like. Once again, though, key level to watch right around that 90 level. And then, of course, after that, 100. So, and obviously this is the strongest sector we're seeing perform in the market. XTN is next. Transportation at the bottom of our little channel / wedge deal going on here. In between, kind of a no man's land between the 236 and the 382. I do expect this to come down slightly lower, but we are at our, descending support line here. So it wouldn't be unrealistic to think we get a bounce back up to retest like 80, and then we go lower here. But as far as I'm concerned for now, as long as we're trading inside of what amounts to, this support and our top level resistance right here, I would expect that to stay the case. So definitely just expecting this to continue trading inside that pattern. So if we're at the bottom of the pattern, seems likely that we need to go sideways before we can go lower, or possibly even up and then come back down. But transportation obviously looking very weak. XLF trying to potentially find a temporary bottom, at least for now. Wants to come back up here and retest the 200 exponential and simple. Needs to close above 35 before 34 50 before that's a case, though. Hard buy signal coming out of the bearish control zone. Bunch of green histograms. Blue slope line. Typically like to see the histogram on top of the slope line before it turns blue. Doesn't have to get rejected here, but oftentimes does. So I don't give this nearly as much respect as if the histogram is already above the slope and it flipped. But it does look, it wants to come back up and test like that 37 level. Still looks very, very weak, but again, at support, at the 236, at the descending, yellow support line here. So definitely seems reasonable that we could get a, weak to mediocre bounce up to like maybe like that 37 level or somewhere around there, as this one has been pretty pathetic lately. XLV, healthcare, it did break down below the 200 exponential and simple. We are sort of like consolidating at that level or trying to figure out which way we're going. All green histograms, hard buy coming out of the bearish control zone on that retest. Looks like it probably wants to come back up here to 200 simple at like 133. Needs to close back above that to continue this overall uptrend. As of now, though, it is holding this very key support level at like 125. If we see that level lost, it's a big deal. But we're basically in between the key area we need to watch right now, which is 200 exponential and 200 simple. For now, it looks okay, though. If we come back down and retest that level, it's going to look like just a breakdown. If we come all the way back up and we start to put in what amounts to like this double-headed, head and shoulders, we could see price action all the way up to like 137. But again, I would look at that as a potential for rejection and, what amounts to like this massive head and shoulders pattern. But for now, momentum in its favor. It did close above 200 exponential. So next area to watch is 133, and then just kind of see how we react from there. XLU utilities. So finally kind of carving out that bottom off of support. It obviously looks strong. It was holding nicely. And then we got a nice update here. Stochastics trending up. All green histograms. 821 cross. Looks like it wants to revisit the highs. Probably will be putting in new highs very soon. XLP. So, this is what we've been talking about, how a lot of these things that have been showing weakness lately, we were expecting at least like a temporary reversal. So XLP, obviously had that big, massive down day with Walmart and Target and everything. And, we violated 200 exponential and simple very aggressively. Now we're just coming back for that retest, the reversion to the mean play. We were clearly overvalued here. We were undervalued here. And now we're right back to fair value, or slightly below it, but essentially there. So again, we'll expect this to act as potential resistance and people to sell into this before going lower. Now we are below 200 exponential and simple. We are starting to see the slopes flipping to the downside. So while they're still kind of flat now and it doesn't look terrible, it does look like, we would expect this to be a resistance area. But if we do reclaim it and start to consolidate, maybe we continue to the upside. XLRE, again, seeing a similar move. We had a pretty aggressive sell-off below 200 exponential and simple. Looks like we're trying to come back up here and retest. So again, this just once again, just the reversion of the mean play. A lot of these stronger assets we're seeing now, or sectors, we're seeing that initial retest of the 200 exponential and simple after our breakdown. But again, we're trading with like a pretty clear descending resistance and support that we would expect to stay in place until otherwise something changes. What's going on, Galt? Good to see you as well. He said, hey, buddy, was just looking back at your December 27th macro analysis of Bitcoin. Last night, spot on always. Thank you for your commitment to educating us. Yeah, for sure, man. Glad to share, obviously. All right, and so DXY, again, seeing a very clear correlation between what's going on with TNX and DXY. They've both been very strong to the upside together, while most everything else has been very weak. And now we're seeing they're showing some of that weakness. 821 cross to downside, all red histograms, red slope line, bearish control zone. It's almost like looking at the same chart. So again, we'll pay attention to key support and resistance along the way. So we had previous resistance around 101. We would expect somewhere around there to 100 act as support. We have another support around 99. We have some other key, horizontals and everything. But at this point in time, around 99 is where I suspect we'll come back down to, potentially get a retest of the 200 exponential and simple. But again, still very, very bullish, especially on longer time frames. All right, so Tesla, again, we're seeing those same, we had a lot of confluence on these charts, and pretty much everything was at support. So, that's why we're starting to see this little bit of a push up from those support levels. So Tesla did put in a new low. Obviously, that's very bearish. Anything that's just putting in a new low, we got to reset the counter on. Doesn't surprise me whatsoever that Tesla's putting in a new low. We do expect it to go slightly lower to the 236 at about 532. Got down to as low as, it's at 658 now, made it to like 623. So, basically around $90 away from our target. I don't consider that to be a confirmation or like retest of the target though. I do need to see it go lower to the 236. It did hit our bottom of the channel. So again, it could just go sideways a little and then go lower. it's hard to just go straight down any faster without losing this channel, unless we get a situation like this where we like gap down and then shoot straight back up. But I do still expect that target to get hit. I will be looking for a scalp play on Tesla around that level, as I would very much expect that resistance and then double support level, as well as the macro 236 to hold. And that is going back to our 2019 May bottom right here. Not just going back to the March 2020 bottom. You know what though? Just out of curiosity, while we're here, I am kind of curious. I wonder if I have that wrong. And I should be using the COVID low, because that actually puts us at the 236 already. Interesting. Very interesting. We actually see a decent amount of confluence between them, but to tell you the truth, both of them are showing key levels and everything, but the yellow one appears to, so far, just because of the shallow retracement we've had, but appears to overall be showing more confluence. But we do see like clear levels like this where it was acting as support and resistance along the way up. So I'm going to leave them both on here for a bit and just see how they develop. But it's definitely worth paying attention to that COVID low. Now, I don't know if I intentionally put that down here or if it just looked right on the chart when I did it. I don't think that that's necessarily a bad thing, that it was wrong, but it's definitely worth looking at both ways to see which one the market is doing. Because you could sort of see this as something along these lines where we basically had a 5-wave structure to the upside all the way from back in 2019. And it's not perfect, but overall, man, I mean, it is pretty. That's a 618 retrace for the one. I'm just looking at, see if this looks technically, like this is being respected by the market, by the algos. This is a 236. Doesn't quite get there though. And then this would basically be the initial bounce is a 618, which is what we would look at right here for the retest, and then it ends up coming lower. Very interesting. See, if this wasn't so shallow right here, I would have a lot more confidence with this 5 waves as it is. I mean, it could be something even like this, where this is actually just the 3 right now, and then the 4 comes down, and then we put in a 5th wave after that. It doesn't have to be perfect every time. But I guess we'll know by how deep the retrace is. I mean, if Tesla came down to like 414 and then started finding support, and we saw some like bullish divergence in place, and was finding, I mean, I would imagine that's probably somewhere around like our weekly. $5.16 and $4.14, yeah. I mean, I could realistically see that playing out where this is like a 1, a 2, this is all a 3. We come back down on the 4 to retest 200 exponential and simple, and then Tesla does a 5 and goes to new all-time highs. And then we could take a Fibonacci extension from the top right here down to, let's just assume we hit the 382, hypothetically speaking, and then the 1.236 is 1600. The 1.5 is 2146, and the 1.618 is 2450. So again, don't want to get like too bullish on this scenario, but picking up Tesla at 414, if we're potentially looking at a move to 2460, could be a really nice trade. I mean, basically a 6x. Very interesting. Definitely worth watching there to see how this develops. Now, obviously, we'll see in time. If we get a perfect retest of, the white 236, which also is a 200 exponential, so we're probably going to get a reaction there either way. That's really not going to give us a great idea. But when we get down here, if we tag the 382, and again, that's right at the 200 simple, so we could easily get faked out thinking we're hitting the 382 or thinking we're hitting the 236, but really the market doesn't care about that moving. That one, it only cares about the moving average. So we'll have to see how this plays out. Again, this could very easily be 5 waves, and then we're going to correct that 5 waves, and we see something as low as like 212, and that would be a 50% retracement of the move going back to 2019. But I do think there's going to be a strong potential move in the near future on Tesla off of some key support levels. And this has held up better than most. Maybe we even get a capitulation before that. Who knows? But I really do think that white 236 is more substantial. I mean, it's worth watching both of them. But the white 236 has the bottom of that B and that D from the triangle. And that lines up almost perfectly with the top before that. So definitely going to keep our targets in place. Keep watching this chart and look for a nice trade setup opportunity. But looks like we may be getting one sooner than later. And obviously we were talking about how some of these charts look the same, but at different points in time. And, we have officially lost the 200 exponential and simple on Tesla and confirmed into a bear market, inside of that like descending broadening wedge, inside the bearish control zone, all red histograms, just now showing some life. First like green histogram in a while. So when do we get that reversion to the mean play? And how does that play out exactly? Well, assuming that we already bottomed, let's say that 236 was the bottom. Oops, sorry, wrong tool. Let's say that 236 was the bottom, the yellow one, and we already bottomed, and now we want to enter this trade. What would we be looking for setup-wise? We would essentially be looking for the reversion to the mean play, which is somewhere around a 35% move to the upside. And depending on where we put our stop loss at, how tight we wanted to keep it, below the most recent swing low is typically what we'd want to do. But also we want to leave enough leeway that we don't just get like senselessly stopped out before it goes in our favor. So something around like 8% stop loss, like below $600 for the stop with a entry at 658, target of 888 or somewhere around there. I would probably be sooner to take profits rather than later. But, obviously we don't even know if this is going to be the low yet. I would much rather enter slightly lower, always with the risk that the trade gets away from us and it doesn't hit our target and we just never get entered into it. But that gives us so much more favorable of a trade setup, because even if whether it comes back to the same level or not, we get it slightly lower at like 541 with again around a 9% stop loss. Same target to the upside, 888, call it 900. That's 64% with an 8.82% stop loss. That's 7 to 1. So there's an argument to be made that we just take, one entry here, one around like the middle of the range, and then one here at the bottom. Obviously the first trade setup doesn't look good if we do it that way, because we'd be basically entering at lower prices instead of getting stopped out. But we would be essentially like the equivalence of like dollar cost averaging into a position. So we're entering a position in a range between the macro 236 or the shorter time frame 236 and the macro 236. With somewhere in between 35% and 65% upside targets. Now, obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. But definitely a case to be made for either of those potential setups playing out for that reversion of the mean test. My inclination, like always, is to be more conservative, be more patient, and try to pick it up around that 550 level. But if we start to see support building, perhaps, I wish we saw a little more, we do see a kind of like bullish divergence here taking place between these two lows, but we don't see it on the stochastics of the TDMACD. Rather see just slightly more confluence on this. Because I could very much see a situation where the market tricks people at the 236 here, thinking we're going to bounce, but really they're looking at the wrong 236, and then it comes down slightly lower. Those same people get bearish, flip position short, and then we hit the support right here, and then we get the bounce that they've been waiting for. So they just end up on the wrong side of the trade, multiple times, when in all actuality they were right. They were just a little too soon. So that's what I'm cautious about on this, but definitely some opportunity on Tesla in the near future, in my opinion. So ARKK. So as far as bottoms are concerned, we're not really seeing, we see a little bit of bullish divergence on the stochastics, but we're not seeing it on the TDMACD. Just low and then lower low, low and then higher low. But we're not seeing that same confluence or anything. I'm not seeing like bottom signals from this or specific strength or anything. I mean, this thing has completely melted down. So we did hit key levels. Do we find support, between the 886 of the Rona move? Or do we find support between like existence? This is arc going back to 2016, like its all-time low to its all-time high. And it would basically be assuming we did something like, a consolidation area, a leg up, a consolidation area, a leg up, and then a distribution area, and then, a leg down. So that would be to our macro 618 in white. So assuming this whole structure was retracing right now, it's possible we could still have a bullish retrace off the 618 where we already tagged like just below $40. And then, that's it. The retracement's done and we go higher from here. I do not suspect that that's what's going to happen. It looks more likely to me that this was a blow off top and then we're going to see a sort of consolidation, not as long as this one, but, a sort of like consolidation redistribution before we actually like retest our previous levels. Now, if the whole markets and the conditions and everything turn around and this just goes sideways for a year while all that takes place, maybe we don't have another leg lower. But it seems very, very likely at this point in time. Seems very likely. It's unbelievable how weak every single stock that Cathie Wood picked was. And then you have Tesla in there, which is one of the strongest stocks, and yet somehow her performance is still absolutely pathetic. So this wave up right here, or, this leg up, is essentially a 382 retracement almost perfectly. And we saw immediate reaction on the breakdown at the 382 in green right here. And then again, we push up and we just roll back over and go substantially lower. We see a move again at 618 back to a 0.5. And then again, we just roll back over. So this does strike me as basically a, longer structure. And this deep retrace again between the 886 and the 1 tells me that this is likely not going to be the bottom. And that we are going to be taking out that $32 level. So I think our next target on ARC is going to have to be the 786. As far as downside potential. I mean, I know it, you'd think by now it can't go any lower because it's just completely melted down, but old Cathie, she'll surprise you. And, we are still holding the 618 in white, so there is potential. There is potential that that could hold as a bottom. But again, because we came so deep on that green retrace, it doesn't seem likely at all. Seems much more likely we go lower. So NVIDIA, continuing to show weakness. Hang on one second. Didn't we see... Sorry, I'm just looking at something else really quick here. Yeah, so we saw an after hours move on NVIDIA down another $12. So 157. So basically just revisiting the lows. So we just had a bearish wipeout of like that last candle is all it is. It's not like, I mean, it's not good, obviously. But it's basically, you know, a new low all over again. So, you know, still looks very weak here. Definitely got to pay attention to, you know, we've been watching this level for a potential for that move back up here, but we lost that 618. So obviously that wasn't looking nearly as juicy. We've been unable to close back on top of it for, you know, a potential scalp move. So we'll have to see if something presents itself when we move back up to that level, or if we're going to end up going lower and then we can enter into a trade right here. You know, but honestly, the way I'm looking at trades right now is counter trend trades in specific is, you know, every single like star has to align for me to be really interested in a trade. I've been very, very choosy of what I've been taking lately, just because there's so much weakness in these markets that even the bullish moves we are seeing are drastically underperforming. So Apple next. So Apple, you know, obviously hit our key level. It's been consolidating around that level. Again, we're seeing a lot of confluence with a lot of these things at their 236 or at their 200 moving average at key support levels. So hard buy signal come out, bearish control zone. Quite a few green histograms. Couldn't close above that 140 level, but consolidating at it. So we'll have to see if it reclaims that level. You know, as far as I'm concerned for now, we did basically hold this support and also the 236 as much as you would kind of expect. And that kind of box has played out perfectly. So as long as we're playing out in that box, I'm kind of like neutral bias on this short term. If we get back above resistance in yellow, I think we probably get that retest to like 155. Nice little 10% move. If we start closing below the 236 and the bottom of the box, we probably do go lower. After such a violent move down, though, on probably the most bullish stock, you know, in the tech space and in most of the indexes, we probably do get a decent bounce here. But again, I don't know if this is going to be tradable just because this has remained so strong. You're really looking at like a 10% upside. You know, is there a possibility for some kind of tight little trade? Yeah, we could probably look at something like this, which is almost like a 5-to-1, but you got a super tight stop loss and a daily close below the 236, you know, basically invalidates the trade at 136.60. Entry basically where we're at now at resistance, possibly slightly higher, and then retest being 200 exponential and simple, 12.66%, 4.76 risk reward ratio. Again, counter trend trade though, so likelihood of success less than 50%. Google is next. So Google finally had its meltdown. You know, we predicted it in Amazon. It happened. Google finally got there too. Slightly above my target. I said 2,000. We made it to 2,042. So close enough for now. Pretty bullish candle right there too. Getting bought up fairly aggressively. The potential for some bullish divergence. We did front run the 382 slightly. I hate for it to get that close and not just tag it. But did enough buying step in there? I don't know, because the stochastics look like they're about to cross back down too. So maybe we're going to get one more push down to a lower low. And then from there, we'll see that strength. Who knows? Maybe we'll come down here and close this gap at 1950. We'll overshoot it a little bit. I think we're getting real close to some potential like scalp buying opportunities. Now, not much has changed on the macro, and I'm still not bullish on these markets by any means. But I'm starting to see some real potential in some big names, you know, not just like scalping trash like AMC or something like that, like actual good companies that, you know, these could turn into like real positions in. Amazon, so it revisited the lows, went slightly lower. Again, we have this trade set up in place for 20% upside retracement to the 382 with a 6.7% stop loss at like 1950 roughly. 20% upside to 2,500 roughly. And that's 3-to-1 risk reward ratio. And it's definitely, I mean, it's consolidating above the support for now and at that key level. So looks okay. A lot of green histograms. Stoch's trending upside, left the bearish control zone. There's definitely some potential for some of these. This could be a decent, week or two. We'll have to see though. I honestly would expect it to happen more on the monthly change. And this week is the last week in the month. So it would seem more likely that we would close, still a pretty aggressively bearish candle and then start off the new month with a nice little green push up. Possibly only push up for a couple weeks and then sell back into it. Possibly have a nice, monthly upthrust, a little bullish retracement of the bearish dumps in stocks. And then after that, maybe we go lower or likely go lower. So Microsoft, again, tagged the box just slightly here at the top. Didn't quite get to the 382. So, a little front run action. Couple green histograms, hard buy signal. Back above the 8. Looks like it wants to retest to 21. I mean, if it gets back above 266, it probably does go back to 278. Couple of these trading a little less technical, probably just because they're bigger names and people are more likely to front run and step in on a buy. But we do see it coincidentally. Microsoft, we see it on. We don't see it as much on Amazon. That's trading very technically. We see it slightly here on Google as well. Apple was pretty perfect. I mean, we had a little wick below, but. And then Walmart has started to recoup a little bit of the losses. Had a little bit of a bounce off of the macro 382 is where we're at now, the retest. But the 618 in yellow here. Again, slight front run of our target. Now, I didn't think we were going to get here that quick. Obviously, like immediately. But we did have the key level, the breakdown level highlighted. So we essentially just hit that measure move. And now this is probably just the dead cat bounce of that. Or most certainly. Now, this is a key resistance here. And it does look like we're trying to reclaim it as support. So again, we could see continued upside move off of this. But I don't really like to count on that. Especially not on weaker ones. Because everybody will be looking for like these gap closes. And more often than not, they go down further until nobody's looking for the gap close. And then they get a pretty aggressive move back up, which would align with that real reversion of the mean test. Because on things like Walmart and Target, we're just now seeing the breakdown after attempting to reclaiming temporarily, but failing to hold the 200 exponential and simple. Now they're flipping bearish, and we're much, much lower now. This is obviously Target now. So eventually we get a move back up to the upside, a reversion of the mean play, up to like 209. And that probably closes the gap. And also, tags the 200 exponential and simple, which reject us, and then we go lower after that. That's what usually happens. The real question is, though, this has continued to melt down lower and lower. And now we have one day of bullishness here. The real question is, does it go back up now and get that retest? Or does it continue to kind of like trend around this area, but stay around this area before we get either another aggressive move down or we close that gap? We'll have to kind of wait and see. All red histograms still, and we're just seeing the first bit of life. So the market's probably still digesting a lot of what took place recently with some of these really aggressive moves in the consumer staples. If growth is slowing, would growth stocks be something to stay away from? Well, you got to definitely be careful, CW, of the valuations. That's the biggest thing. Because when we're in a bull market, things trade at crazy valuations. And, we start to see like that decompression taking place. So, it doesn't mean growth's not good. It just means the current valuations might not be good. So regardless of the price, if it's trading at some ridiculous like PE ratio, it's not unrealistic to see like that compression in that ratio. That's why it's so important to watch both. CW said new home sales down 17% month over month, down 27% year over year. Yeah, I mean, we're definitely seeing some weakness in the housing market. I mean, home builders have been getting wrecked for quite some time now. But there's definitely cracks in the housing market. I mean, obviously, you don't have to be a genius to figure that one out. The honkiness says NVIDIA rose after earnings, after hours. No, it dumped, dude. It's the other way around. NVIDIA dropped after earnings, after hours. Like 8% or something like that. $12. Yeah. I mean, we looked at that. You probably wrote that before I looked at that, though. That's probably why you said that. But anyway, so let's take a look at our cryptos. So, I mean, crypto market has been, sleep city. Absolutely nothing happening whatsoever. We're basically putting in what amounts to some sort of channel or, wedge, a little bit of like a triangle or a flag, maybe a pennant. We'll have to wait and see how it develops exactly. But, again, we have a leg down and then a consolidation pattern typically leads to another leg down. We did have a pretty aggressive rejection of lower prices, that wick. Market doesn't usually let you get multiple opportunities to buy the bottom. So if that was going to be the bottom, at least like short term, we probably don't come back down and revisit again. So the longer we hang out at this level, the more likely I think we just start bleeding off right here. We do see on the daily, though, we're showing some strength. We have the buy, sell, buy. They're spaced out kind of weird here, but we see all green histograms. Stoch's trending to the upside. We're at the 8, so if we can reclaim the 8, the next move on the daily is a retest of like 3,200, which would be the 21 daily, which is our target to the upside based on shorter time frames and what we've been discussing lately for basically that retest. 32 and then 36 potentially for bullish targets to the upside. Still a little early to tell. And, we're not getting any signals from the market like, hey, I'm super bullish. Like, make sure you don't miss out on this next 20 to 35% move that I'm about to have. We're not really seeing that at all. There's some people obviously talking about this gap right here. We did leave a gap at about 35,860. So that also would get filled on a 36,000 retest. So again, there's definitely there's an argument to be had for it, but you have to look at the gap back here from December 2020. And, here we are in, mid 2022, and we're just now coming back down here to fill this. So, who's to say, sure, maybe we fill that gap, but maybe we do it 2 years from now. Eventually if we put in a higher high, we'll fill the gap for sure. So we just don't know when it's going to happen. So you don't want to time the market based on gaps, but they're definitely worth paying attention to. And then the Bitcoin spot chart, not giving us much more of a clearer picture, to tell you the truth. Not really seeing a ton of anything one way or the other. When we zoom down, I don't like looking at the shorter time frames, but when we zoom down to this on the 4 hour, we can see basically this is just a tightening range, and it's just flip-flopping the 8 and 21 back and forth. So the whole time we went sideways, the 4 hour had basically a bull trend in place on the TJD TDMACD. So this is where this works perfect. Okay, this is a perfect example for me to talk about the TDMACD and why I like it so much. The regular MACD is very cool, very useful, but the TDMACD helps you to identify trend better. And that's why like the blue and red flip of the slope line and the way that this calculates, the histogram basically versus a regular MACD essentially just told us, hey, this was a downtrend that started right here and then it went till right here. And then that started an uptrend. And in the uptrend, we just went sideways. And now we're basically right back where the downtrend started. So we had a massive leg down during the downtrend. And then we had a sideways consolidation during the uptrend. And now, we're right back at that neutral level basically. But look where price action is. Here's neutral on the histogram. And we're at 29,666. Here's neutral on the histogram. And we're at 39,488. So we lost $20,000 off of price action on the 4 hour chart during this little trend that it identified. $20,000 of price action. And then during the uptrend that corresponds almost the same length in like daily bars as well as the same distance. Obviously one ends and the other starts. So they're both coming from the exact same level and then returning to the beginning of the other level. So this right here is a perfect example of what I call a bearish reset. So the indicator oscillator trended down aggressively while price action trended down aggressively. So we saw confluence. Price action was crashing. The indicator oscillator was crashing. And then here we see price action going sideways and doing nothing while the indicator oscillator trends back to the upside. So now we see divergence taking place, the divergence being between the price action, which is going sideways, and the indicator oscillator, which is trending to the upside. So now we have a trend down in price and a trend down in oscillator, and then we have a trend sideways in price and a trend up in oscillator. So when we get our next trend down, whenever that happens, assuming very soon, it looks like we're about to flip over, we're losing our, blue slope line and barely able to stay above it, and we're at resistance at the 0 line. So assuming, let's just say right now, this flipped over and started trending back down. Now, if we had a similar move to the previous move, which was 39,000 down to, 25,000, we could essentially, potentially get another 10,000 or so move to the downside that corresponded to something like this. And in the meantime, the upside move recovered almost none of the losses. So that's why I call it a bearish reset. It's not like an official term that you're going to find in books or anything like that. It's basically just the price action and the indicator oscillator diverging for a short amount of time so that they can start moving back together again. Because essentially what the divergence is it's telling us that price and our indicator are not doing the same thing. So one of them is lying to us, and we know in a long enough time frame that can't continue. So that's why we look for divergence for potential flips in price action. We look for a divergence low, like bullish divergence, telling us we're likely to get a bullish move now because the indicator and oscillator are not lining up, and we know that's unsustainable, or vice versa on a bearish move. So very interesting what we're seeing on crypto right now on the shorter time frames, and definitely worth note that it basically looks like we're going through a bearish consolidation, rebuilding that momentum so that we can reclaim those key levels. That way we have enough fuel to take another leg lower. The same way we consolidate on the way up during a bullish reset. And then here we can see it pretty clearly on the daily as, we came out of the bearish control zone right here, and we have trended up on the stochastics all the way from the 20 level, which is leaving the bearish control zone, obviously, all the way to the 50 level, which is neutral. So we went from bears in control to neutral on the indicator oscillator. But again, the price action, when we got that cross, was essentially right here, and we're still at that same level. So the indicator oscillator has gone up, 50% of the way, of the neutral zone. So back from 20 to 50, but price action has gone nowhere. So now again, if we have another leg to the downside, we're back at 50. So we have plenty of fuel to get all the way back down into the bearish control zone and go much, much lower on price. And because none of the price action was recovered to the upside, we're just starting from the same level and then just going lower. Same thing with all the green histograms on the TJD, TDMACD. And we are at that red slope line, which we would potentially expect to act as resistance. So maybe we get another leg down here, put in a new lower low on, 4 hour or, probably daily close, try to revisit the lows right here, and then we can put in some bullish divergence and maybe get a pushback to the upside. But aside from that happening, this looks very weak to me. The daily, the weekly, the monthly, it all looks very weak. We're still just, new weekly low last week. Still just headed down to the moving averages. Hard sell signal. Just looks like bearish divergence on long time frames playing out. Not what we want to see. Does look like we're preparing for another leg lower on crypto. Ethereum chart looks the same. Very bearish. Almost no bounce. The Bitcoin dominance chart. So we did get the close above our resistance line. And then I said what we were looking for is an open and close. Doesn't need to move. We don't really care. We just want to see it open one weekly above it and then close one more weekly above it. So now we have a close, an open, a close, and now we have another open above the breakout point. So I do expect full-on continuation. And the measure move of the breakout is 51% Bitcoin dominance. So that would be Bitcoin gaining dominance, over crypto. So, obviously that corresponds with either Bitcoin going up parabolic and alts lagging behind, or alts going down parabolic and Bitcoin holding up slightly better. And that looks very, very likely right now. Seeing a lot of confluence in these charts telling us prepare for another, 40% leg to the downside. I shouldn't say 40. Let's start with 20 and then 40. So total market cap on the weekly, again, just melting down. We did see it hold up not put in a new low on the weekly candle last week, but we are, obviously at a new low right now. If the weekly close, still have a few days left in this week. Don't want to see a new weekly low close on this. Looks very, very weak. Looks just like the Bitcoin chart though. Matic. So Matic is just holding on to that same support level we had discussed. That blue support. It's basically holding up perfectly. It's literally where we're at. And again, is this just a bullish reset on all these cryptos before we go lower? And if Matic goes lower, I mean, we really got to hope it holds $4. Don't want to see this thing down at like $1.50. Avalanche looking very weak, putting in new lows. I mean, this one is literally just melting down. And we already hit the 1.618. This already looks like it's rolling over. So not only did it not go up, it didn't even go sideways. It's basically just melting down. So this is very, very weak. Solana slightly stronger, hasn't taken out the low yet, but again, just kind of going sideways. These really look like bearish resets right now taking place. Monero obviously having a very strong bounce here, getting that nice retest of the 200 exponential and simple. Very, very strong in comparison to most of the rest of these cryptos. Still does look bearish. This is basically that second reversion to the mean though. So the first one, obviously we broke down from it initially, and then we got back on top of them and consolidated, and now we're getting a retest afterwards. We would expect them to act as resistance and not reclaim that level this time, and then we would really get a level, like a leg to the downside. As at that point in time, we've completely lost them. Here, there was still hope. We're retesting them. We're reclaiming them. It looks okay. We're breaking out of a, sort of descending channel pattern going on here. Then we come all the way back down. That you could tell the market is respecting the channel and the heart line and everything, but not nearly as much as it is respecting the moving averages right now, as we see so many retests, bearish and bullish of the moving averages. Now again here, don't want to get too bearish on this situation just because the rest of the market looks like trash, because it is still lining up perfectly with that macro cup and handle that we talked about. So don't want to get too overly bearish right here, but it does look better than most cryptos, but still looks weak. I mean, at this point in time though, man, I mean, it would really have to, it looks bearish to me, honestly, but it would have to have like a 40% run up to the upside to take out this high and then potentially look actually bullish. And after that failed breakout, yeah, I just don't like this. I think this is a fun little trade, and definitely some guys made some money off this, especially off that divergence buy sell buy signal here, the most recent one, or the run up before that. But I think this is probably one that you got to let develop a little bit. Don't want to get too aggressive in this and then take a big dump, or it takes a big dump on you. So algo, again, just melting down, new lows on this. Just looks very weak. Very weak. Anything that's consistently just putting in new lows right now is not good. Not good. Anything that's at least trying to get back above 200 exponential is much better. So look at Monero chart compared to this. Monero is at the 200 exponential and simple. That would be the equivalence to this thing being at $1.06 basically, and it's at 40 cents. So it would need to have like 150% move to the upside to be as strong as the Monero chart is right now. Just for perspective. So Monero looks a lot better than most of these other cryptos do. And Monero doesn't look particularly great right now. Also, it's at resistance though. So, you guys know I like to sell resistance and buy support. So XRP, very weak. Again, it's not putting in new lows, but it's just trending sideways while the indicator oscillators move up. So by the time it's ready to actually move up, they're going to be already maxed out. And then it's like, oh, nope, we're going down now. Cardano, same thing, consolidating off the 382. Does not look good. So KNC, Kyber Network. So again, look at the relationship between what's taking place right now and something like Monero. We're getting that retest of a 200 exponential and simple. So in comparison to the rest of the cryptos we looked at, this one is much, much stronger. Recently put in that double top or, arguably like new all-time high or retest of the all-time high we were talking about last stream. So it got a nice bounce, came back up between the 0.5. No, actually almost tagged the 618. We'll call it the 618. So tagged the 618, dropped the 0.5, came down to the 382. So realistically, what are the two, possibilities right now? When I look at this chart, I see, well, we either get a bullish push back up and retest the 618, and then possibly even go higher to the 786 if we can reclaim that level, or we lose the 382 and then we go lower to 236. So we're basically right smack dab in the middle, at the 382 of our, oh no, I'm sorry. So we still have the 0.5 and the 618. So arguably there could be a trade setup right here if this level starts to hold. If we start to see some sign that this is putting in a temporary bottom, that would be a 21% downside, which is a pretty aggressive stop loss. Obviously, we'd be more looking to reaccumulate or purchase more or, increase the size of our position at the 236 rather than use it as a stop loss. Because essentially, if we lose the 382, we would assume we're coming down to the 236. So we'd rather just re-enter lower. So I would use a tight stop loss of like 6.2%, roughly. New low right here on price action. And then be looking for a 45% move to the upside with like a 7-to-1 risk-reward ratio. That would be the more aggressive play. But the real play that we're actually looking for is the 236 play for the retest back up to either the 618 or the 786. Now, does that happen? No. I mean, it probably goes to zero. Probably goes immediately to zero as fast as it possibly can. Oh no, did I just ruin this? I don't think I'm going to be able to grab that again. Damn you, TradingView. All right, let's try this one more time. Okay, there we go. So yeah, something more like this. I mean, that's wild. This thing had a pretty aggressive move off the dump. So, that's ideal. Looking for that entry at like 160 on KNC. Not a lot of great crypto setups at the moment, though, and that's probably one of the better ones. So Hex, okay, so we got the completion of our move. So, all right, so Hex is completely our bitch. It's basically, does whatever we say. So we're completely dominating Hex. We literally discussed this exact move, and it played out perfectly. So if anybody traded Hex, congratulations on your 55%. I personally did not for any particular reason, just because, it doesn't trade on the exchanges that I use. But if you did take that play, congratulations on your 55%. Easy money, as Hex basically just bent over and took the TA. Yeah, so I mean, at this point in time, we got the fifth wave. We came down here to the target for the retest, lost support. At this point in time, you have to just assume that, this was our 0.5. I obviously thought it would take a little more time to get there. These aren't meant to predict time. I can't predict how quickly I'll be right. Sometimes I just say I'll be right, and then we have to wait for it to play out. Apparently, the markets are in a big hurry because they insist on making us right, like immediately after we do technical analysis. So, which is nice because then you don't have to wait. You get fulfilled immediately, and you're like, yep, I was right. On to the next. So anyway, with Hex, I mean, this thing has completely melted down, but this has acted as support multiple times, the same way this has acted as resistance. So the fact of the matter is, we have to respect this as support and just assume that while we're continuing to trade inside of this channel, that we're going to continue trading inside the channel. So the responsible thing to do right now, is to, look for the long trade. Well, I shouldn't say responsible, but more like rational. Like next step is to basically look for, the long. Now, the real question is, how long does it take to get there? Do we come back up to the 200 exponential and simple? Do we come back up to the top of the channel? Does it just take a little while to get there? And it just does something like this. That was our bounce. And then we get a move back up here like this. That seems probable what our bull move would look like. That comes to follow. Assuming this move is done, which it seems likely that it is, as it already hit our target pretty clearly. That's 111% upside with a 14% stop loss. So stop loss below 70 cents. I'm sorry. Below 7 cents. Way below 70. Stop loss at 70 cents. Slightly below it is what I would go for, just because I don't like nice round numbers. But that would give us somewhere around like 13% stop loss, 111% upside for an 8.4 to 1 risk reward ratio. I mean, this thing has been trading very technically inside the channel. So again, while we expect that this would only have, less than 50% chance of playing out, and it could completely underperform, and it just comes back up here and then it breaks down again. But even then, the risk reward ratio is like 3 to 1. So, that's maybe like the initial play that we're looking for. And then if that one plays out, we maybe take some profits, but get a little greedy and look for, the remainder of the play. So that's pretty nice setup on Hex for a potential counter trend scalp to the upside, which has a higher than 50% probability of failing because we're trading against the trend. But with the phenomenal risk reward ratio of like 8.5 to 1 and a dub, essentially, I mean, it might be worth opening an account where you can trade Hex. And then next we have our commodities. Just a reminder also, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Recently, people had asked about a couple like random cryptos that I haven't been looking at lately, or pot stocks or uranium stocks, whatever, various stocks, semiconductors. If I'm like, how do I put this? If I'm super interested in a space, I'm probably going to show off multiple charts, like from those assets. Like if I'm looking at uranium for a potential entry or retracement or take profit or something, I'm probably going to bring up more different uranium charts showing a diverse range of similar assets so that we make sure that we're on top of the move. We don't get front run on one asset and the other 5 in the same category. We're telling us, hey, we're at support. And then we're looking for it slightly lower because we're looking at the wrong one, the strongest one or the weakest one or whatever. So when I'm looking at a sector more closely for opportunity, I'll tend to show off multiple charts, like of assets from that sector or from that asset class, etc. As where when I'm not looking for opportunity as much, I'm kind of just waiting for price action to play out. I'm still watching those things on my own, but I'm less likely to show like a bunch of them on stream is all it comes down to. So there was a couple questions about semiconductors, about Hexo, about gold and silver miners. It doesn't mean I'm not looking for opportunity in the space. There's less opportunity currently presenting itself, or we're not close to key levels at this point in time. So I'm spending less of our time on stream looking at them. Does not mean I'm not still watching them by any means. But typically the whole space is going to move together. Like all pot stocks are just going to keep melting down as long as they're melting down. The same way like all uranium stocks are going to keep looking great as long as they look great. And, miners, etc. So gold had a nice little retest. We see some strength out of gold as the DXY and the TNX are under pressure. So now we have to watch because this thing has been acting so crazy over the last couple of years. A lot of times we see it moving with DXY or TNX. That's like that fear trade. And then a lot of times we see them moving inverse of each other, and that's more like the inflation trade. So when it's all said and done, this is sort of like that counter trend move. The dollar and TNX are kind of having that trend down after really strong upside. Gold is kind of having that trend back up after really strong downside. It is trying to reclaim the 200 exponential and simple. Hard buy signal. Pretty aggressive stochastics to the upside, and we have not moved far. So not a bullish, or I'm sorry, bearish reset by any means, but doesn't look like that aggressive of a move for how much we've seen the indicator oscillators move. So we don't want to see this get tired and then roll back over because it's really going to look like a rejection then. And then obviously we looked at the weekly and talked about the monthly. This essentially to me looks like the retest of the breakdown. We broke down, we retested it as resistance, and now we're getting rejected and starting to go back lower. And if we do go lower, we're going to start retesting key levels like 1750 or, potentially like high 1600s. But this is really alarming to me. The hard sell signal and Stokes angle to the downside, and they're diverging from each other, which means the trend is strengthening to the downside. We're also seeing a bunch of red histograms. We're below the slope line now. The slope line has flipped over red, and we have the 821 cross. So this is basically the beginning of a weekly bear trend in gold. Now, granted, we had a couple false alarms here, but like this was a little bit of a false alarm, you know, because we immediately reclaimed those levels. But then here we had a pretty aggressive move down. And then again, we kind of had like a false alarm. But is it really a false alarm? Like if the 821 cross was essentially from the cross down here to the low, if it was 10%, you know, that's not really a false alarm. Like you kind of want to get out of the way for those moves. Now, obviously with gold and silver physical, you're not going to trade in and out of them because of, you know, spot markup for like a 7 to 10% move. But maybe this doesn't catch at 7 to 10% move and we end up with, you know, a more powerful move, which in this case would be the retest of a 200 exponential simple, which is closer to like a 10 to 13% move. So is it worth going out and selling off all of your, you know, gold that you have to pick it up lower? No, not by any means, but it's worth paying attention to that, you know, we're showing some weakness in the chart on a potential weekly time frame that could eventually give us a retest of the lows or lower lows. And, you know, if that's the case, we could essentially see something like this 2011 top, which it looks very, very similar to in structure. So, you know, I've been talking about that literally for years at this point in time. You guys know we rode the gold train up from like 1,300, rode silver up from like $13, $14. But you know what? It is what it is. When it's weak, we're going to talk about it as weak, no matter how much I like the asset class. So silver next, again, very, very weak. Broke down, new low, retesting what was support as resistance. I do not like silver hanging out at this level. You know, we really want to see silver back above 22.63. The longer it spends down here, the more likely it looks like it's just about to have a big, aggressive leg to the downside. And the weekly chart's terrible. We already retested 200 exponential. We front ran the 200 simple slightly. But, you know, if we end up coming back down here and not finding support, you know, we're looking at like between $17 and $19 short term. And then the gold silver ratio, again, we broke above the 200 exponential and simple, beginning of a potential uptrend. Both of them have a positive slope. So this is a very, very bullish chart to me right now. And this is the beginning of basically gold going into a long-term trend against the price of silver. So saying that gold will likely appreciate substantially for a long period of time compared to silver. You know, last time it happened, we put in a new all-time high on the gold-silver ratio, and that was the Rona scare. Definitely something to pay attention to right here. ACB, so for our pot stocks, you know, a lot of these put in new lows and then came back down, gave back a lot of the recent move. You know, we're below that previous low from ACB, going way back. It's not good here. This is the last place we want to be. We're basically at the last line of defense. So now, I mean, I don't know what these things look like. What does ACB even do? Does it go to like 75 cents or something? I honestly don't know. Because to me, I mean, if you buy it at 268 and it goes to 75 cents, of course that's terrible. But if you buy it at 70 cents or you buy it at 268, and I'm just picking that 75 cents out of nowhere. But whether we buy it at 268 or whether we buy it at 68 cents, it doesn't matter if it goes back to $150. Now, does it have to go back to 150? No, it could go to zero for sure. But I mean, what are the percentage gains? You know, if it goes down below $1 and then it goes to $150, you know, that's like 150x. So it's not bad. It's okay. You know, from 268, if it goes to 150, it's not as good, but it's like a 50x. So it's still okay. It's all right. It's worth getting out of bed for a 50x, I think. So the truth is, does it matter if you're buying at 268 or at 75 cents? If you believe that pot stocks will succeed into the future, and one of those pot stocks that succeeds will be Aurora Cannabis, and that one day it will at least retest its previous all-time highs, even if it never goes higher, and that at that point in time, if you bought right now, you'd basically be up, you know, over 50x. I mean, so is there a bad place to enter where we're at right now? Honestly, not really. And we really don't want to try to pick like bottoms and tops on these things. But, you know, you got to look at your position and say, all right, if I enter at 268 and then it goes to 75 cents, am I going to hold? Am I going to be pissed? Am I going to be broke? You know, am I going to diamond hands it? And then at that point in time, if you think it's going to go to 268 or a possibility it goes to $1 or sub-dollar or even to $2, you know, why don't you just wait then? Well, I mean, tough decision. You got to make up your own mind. Obviously, none of this financial advice. I can't tell you where to and not to build positions. In my opinion, the best way to build positions on assets that are melting down like this is when we take scalp moves to just leave a small portion of the market's money in action. And then, we can start buying into strength. Or one of these times where we take one of these scalps and it plays out nicely, we take profits and then it actually continues to the upside. So in order for this thing to ever look bullish, first and foremost, we have to get an 821 cross to the upside. After that, we need to reclaim the 200 exponential and simple. So we're still very far from either one of those things happening. So, I'm not trying to pick out bottoms right here. There's literally like days when I wake up and I'm like, oh man, am I getting greedy on these pot stocks? Like, should I start, really building a position on these things? And you know what? I mean, there's an argument for yes, we should be building a position already. But there's also an argument that's like, wait and let the market tell us where the bottom's going to be. There's a possibility, though, obviously, any one of these things can literally just skyrocket to the upside. Maybe the whole space gets skyrocketed to the upside. There could be an acquisition. Somebody could step in and buy up ACB at, $4. We don't know what's going to happen. Obviously, nothing's certain, but I'm not just going to throw money at this thing just yet, this space. Tilray again at key support levels. That was our previous low right here. Not the all-time low. Still got a way to go back down to like 250 on a retest of that. But again, still looks very, very weak here. Very, very weak. Looks like it's rolling over too. Stochastics on the daily. Look like they're rolling over. It's going to try to retest the lows. And that's like I said with Hexo and some of these other, like the ETFs and everything. They just all look pretty much the same. What's the other one we always look at? I can't even think of the name of it off the top of my head. Sundial and it's not the one. Yeah, you know which one it is. Next we have CCJ, Cameco. So again, just kind of hanging out at the 200 exponential and simple. This one I like to use as a gauge of the market because it tends to be a little more honest. It is reclaiming the 200 exponential and simple. Does look okay for now. But is this going to hold or is it going to fail and break lower? That's a tough one. I mean, it's still holding structure for the most part. Maybe we should put one of these in now. I think that's probably realistic. Yeah, look at that bottom right there. So, we see like the very strong uptrend right here. And then we kind of lose that uptrend right here. And then next what we'll look for is basically when we come down next, we put in, a same low on the next one maybe. And then we'll have something like another histogram. Or I'm sorry, another parabolic like support line. Something like this. We bounce up here, put in another lower high, come back down, put in the same low. So we basically have higher lows with an aggressive slope in blue. Then we have higher lows with a less of aggressive slope in green. And then we have equal lows in yellow. And then, once this trend rolls over and the parabola actually like starts weakening to the downside, then we start seeing basically like lower lows taking place. And that's kind of like how the trend rolls over. And we see similar, lower lows on the bottom and lower highs on the top. And that's essentially the transition from higher highs and higher lows to same highs and same lows to lower highs and lower lows. And that's what I'm expecting to happen right here. Now, it doesn't have to, and I'm not going to miss this opportunity if uranium starts looking juicy again, but it really does look like it wants to roll over on the daily time frame. The weekly looks okay, but we had the 821 cross to the downside, like basically right above our head, getting ready to take place. So if we reclaim these levels above 25 again, I'll probably have to just get bullish on this for a retest of the highs and probably much higher. But if we do get rejected right here, which I would expect, I do think it's just a matter of time before not only do we revisit those lows, but possibly even tag the 200 exponential or simple before going much, much higher. That one really gives us a little more bullish case, but a very clear picture. Here on URA, we see this one has already sort of taken that next step. So we went from the lower, higher lows to like the same lows. So this one is already at like that yellow slope line now. It's like neutral, but now it has a red slope on top because it has a lower high and a lower high and then lower high. So, you know, if we were doing that same situation and watching that play out, we would see obviously this is a negative slope. This is a neutral slope right here. And then if we come back up, put in another lower high, that's negative slope again. And then we eventually come down and put in our lower low. And now we see the trend has basically rolled over. And in relation to the moving averages, we can see the 200 exponential already has flipped. 200 simple is basically neutral. We saw that once before, and then we got back on top, but then we put in a lower high. So it was like any attempt at the trend being strong and continuing to the upside is invalidated basically once we put in the lower high and then lose the 200 exponential again. So the next realistic, reasonable thing to happen would be another retest and then denial at the 200 exponential and simple, and then we go lower. So we break down from them here, we reclaim them here, but can't hold it, equal low, then we come back up, reversion to the mean, rejection, then lower low. And again, that's just the market structure, how they just roll over. Pretty clear picture from URA. UEC, you know, again, we're seeing the same thing taking place, just slightly more like our CCJ chart as we put in a higher high here, and we still have higher lows as well. So we might not be as aggressively putting in higher lows, but we are still putting them in for now. We are below the 200 exponential and simple though. And then UROY looking much, much worse, well below the 200 exponential and simple. Again, we see lower highs and lower lows taking place on this one. So, you know, this would be a red slope line on the bottom and red slope line on top while we're in a bear market. So again, this is very much the most bearish of the uranium charts we've looked at. You know, which kind of goes against fundamentals. You would think that if costs are rising and so is uranium price, that a royalty company would do better because they're getting paid regardless of what the costs are. They're getting paid by, like, you know, pounds, mined or refined or whatever the situation is. As where an actual like gold, silver, uranium miner, if their costs go up, they make less profit margin. You know, even if the price of the uranium's going up, as opposed to the royalty company, which doesn't have any cost pressure from rising labor prices or, you know, rising whatever other costs you have, diesel, etc. So very strange that we're seeing more weakness in this one. You know, because fundamentally, if you were trying to trade this, you would say this would be the strongest one right now, but it's very clearly the weakest. We did hit that key support at the 382. There is a potential scalp still in play here. Got to see some kind of like strength out of the uranium stocks. That's not what we're seeing right now. Potential 30% upside, 10% downside, 3-to-1 risk-reward ratio, target of $3.64. Stop loss at I would say slightly below 250, and a entry at like 277, which is basically where we're at right now. So again, this still hasn't moved in the last couple of days since we've been talking about it. But definitely a potential. You know, I would have liked to seen this come down slightly lower and hit the channel. And then we'd have, you know, multiple touches on top and multiple on bottom. Right now, we only really have one touch on bottom. So we could easily see this go from being, you know, what looks like a clear channel to something like, you know, maybe a much more, like just hypothetically speaking, a much more like aggressive downside support. And it's more like a descending broadening wedge. And all of a sudden, this just has a massive move down. And it looks like, oh, we broke out of the channel. But really, the channel was never valid. Which it's still technically not. So, but yeah, looking definitely weak on that one, but potential for probably what would be an underperforming upside move. And then we talked about Altria on the last one. We're just kind of keep this one up here for now, as we really are looking at like a macro shift in this. And again, we're always looking for like defensive stocks in times like this, and looking for, you know, something that pays a decent dividend and has a nice long juicy track record and is not some, you know, tiny little micro cap company or, you know, what amounts to a penny stock. And this is one of them. This thing is a behemoth. Very much finding support at 200 exponential and simple on the monthly and starting a monthly uptrend. The weekly has confirmed above the 200 exponential and simple and is basically retesting. 200 simple is essentially flat. 200 exponential is angled to the upside. We do see a sell by sell signal on this before we get this dump down. But this looks like basically the reversion to the mean play, the retest of a 200 exponential and simple before we flip this into a weekly uptrend. You know, and we talked about this before last time. Maybe I didn't. I can't remember. the last time we got above the 200 exponential and simple, trended to the upside, we did like over 300% to the upside, and we did it over a 2,842 day period. So from 2009 to 2017, so about 8 years. And you know, these cigarette companies or tobacco companies or whatever they want to call themselves, smokables, 60% downside, you know, and basically, you know, from 2017 to 2022, it's been in like a 5-year bear market. So we see a similar, I shouldn't even say similar because the pot stocks look so much worse than this. But on like this chart, when we look at it right here, this thing, you know, topped out in 2017. There's not a lot of sectors that did not put in a new all-time high. So, you know, obviously this thing has been beaten down for some time. And, you know, I don't want to bet on the three-legged horse by any means. But when the three-legged horse, you know, all of a sudden starts looking juiced up and taking first place, you know, it might be time to bet on it then. I don't want to bet on it when it looks like it's about to fall out. But looking pretty good right now. So, you know, finding some support on 200 exponential and simple on the daily. So we're going to look out for where this potentially bottoms at. And, you know, could I see this coming down slightly lower still? Yeah, I really do. I mean, I see the entry at like $50. Maybe even slightly lower. You know, I would really like for this to just come sideways and just kind of chop down. Maybe even come back up, put in a lower high and chop down. And then really just like to load up on this at like $48. Maybe not. Maybe we don't even get there. Maybe we just revisit the lows. And by then the 200 exponential is up here. You know, and that's, I mean, on this chart on the weekly, you know, this green box is September 2022. So, you know, that's literally months away. So when we look at these long time frames, definitely seeing some longer trade setups, but very clearly some strength here in some of these. And we talk about this all the time, how, you know, we would expect basically, you know, the vices to do well in, you know, recessions or depressions. And by the vices, I mean things like, you know, cigarettes, alcohol, you know, potentially pot stocks, potentially, maybe, possibly, if they're not all at zero by then. But yeah, we did it. Made it to the end. Take a look at everything. Definitely some nice trade setup starting to develop. So we see that patience really playing off as we had a couple weeks there where there wasn't a ton of great looking trade setups. And then we had a couple of trade setups starting to show up that looked okay, but we weren't super confident on them because we weren't seeing a bunch of confluence. And the risk reward, you know, wasn't, or the, yeah, risk reward wasn't beautiful compared to probability of success. Now we're seeing the opposite. Now we're seeing some real nice trade setups start to develop and some potential like counter trend moves, opportunity to take advantage of some of those trade setups. So yeah, honkiness. I think it's the other way around, man. I think it might have rose and then dropped. Because I'm seeing the after hours close down $11.63 on NVIDIA, which is a 6.8% move. So it closed at 167, like regular market hours, and then after hours had like a $12 drop. So it went down to like 157. Yeah, that's what I'm seeing. So it depends when you looked, I guess. It might have been up when you saw it and then it went down. Carva Luce said message retracted. Kama Betty says Bitcoin to 10K. Yeah, I mean, eventually it looks like it, right? Thank you, sir. Appreciate your TAs. Keep up the good work. Yeah, appreciate all you guys. Thank you all for showing up tonight. Hopefully you enjoyed the stream. Obviously, make sure to check us out every Wednesday and every Sunday from 8 p.m. till 10 p.m. Eastern Standard Time. And, of course, every Friday from 11 a.m. till 1 p.m. Eastern Standard Time. But going to go ahead and wrap it up there. Thank you all for tuning in. Protect the principal, guard that capital, and, you know, obviously practice proper position sizing, risk management, and look for those favorable probability of success. You know, make sure that we are being responsible, taking advantage of the situation, there are a lot of juicy things that are down substantially, but it does not mean they can't go down substantially more. So, we don't want to look at it like that. We want to look at rational, realistic reasons that we're entering into asset classes or specific assets, in general, and then make sure that we can justify those, and then, document it in our trade journal. That way, if we're right, we can go back and say, hey, we identified all these things and we were right. So maybe we should weight those slightly more heavily in the future. Or if we're wrong, we can say, well, we build a case. The case did not play out. So what can we do in the future to be wrong less? Or what signs did we see that were invalidated so that we can make sure we don't make that same mistake in the future? Just always growing, always learning, and progressing our game. But that is it. So everybody have a great night. Thank you all for tuning in. We'll see you on Friday's stream, 11 a.m. Eastern Standard Time. But it is Wednesday, 9:32 p.m. on 5/25/2022. I am Crypto Trend Trader, and I would like to remind you that none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. That's it for tonight. Everybody have a wonderful evening. Crypto Trend Trader, and I'm out of here.